With market uncertainty on the rise, everyone's looking for a safe place to park their money. What if I told you there's an ETF designed to weather the storm and keep paying you even when the market tanks? Stick around as we dive into why SCHD might just be the recession-proof investment you've been searching for in 2025. The stock market can feel like a roller coaster. One day you're up, the next day you're down. But what if you could smooth out that ride while still growing your wealth? That's where SCHD, the Schwab US Dividend Equity ETF, comes into play. SCHD is one of the most popular dividend ETFs, known for delivering consistent returns and income, even when the market gets bumpy. It's a favorite among investors looking for a blend of growth, stability, and reliable dividends. In this video, I'll walk you through 5 key reasons why SCHD is grabbing investor attention for 2025. Whether you're a seasoned pro or just starting out, these insights could be the key to securing your financial future. So let's dive into the first reason: SCHD's strong historical performance and consistency. Chapter 1: Historical Performance and Consistency. When it comes to investing, consistency is key. The S&P 500 might be the gold standard for the stock market, but it's not immune to wild swings. Enter SCHD, an ETF that has built a reputation for being resilient even when the market is on a roller coaster ride. What makes SCHD stand out is its ability to deliver steady returns, even during market downturns. Take the 2020 pandemic, for example. While the S&P 500 was all over the place, SCHD held its ground, proving its worth as a stable option in uncertain times. In 2022, when the market was reeling from economic uncertainties, SCHD was one of the best performers, losing only about 3%, compared to the S&P 500's 20% drop and the Nasdaq's 35% plunge. That's a significant difference, especially for those looking to protect their portfolios from severe losses. But it's not just about surviving downturns. SCHD has consistently delivered strong returns over the long haul. Over the past 10 years, SCHD has averaged an annual return that outpaces many other dividend-focused ETFs. This consistency makes it a go-to choice for investors who want both growth and stability. In short, SCHD's strong historical performance isn't just a fluke. It's a testament to its resilience. And as we move forward into uncertain times, that resilience becomes even more valuable. Now that we've seen how SCHD has stood the test of time, let's explore another key factor that's driving investor interest: its robust dividend growth and yield. Chapter 2: Robust Dividend Growth and Yield. In today's high-interest rate environment, finding investments that can keep up with rising costs is more important than ever. That's where dividend growth and yield come into play. But not all dividend investments are created equal. Some are far better at weathering economic storms than others. SCHD sets the bar high with its rigorous screening criteria. To even be considered for inclusion, a company must have paid dividends for at least 10 consecutive years without a single cut. On top of that, these companies need to show 5 years of consistent dividend growth. This ensures that SCHD is packed with financially stable, reliable performers. Let's talk about numbers. As of the latest data, SCHD boasts a dividend yield of around 3.2%. While that might not seem sky high, it's solid when you consider the quality of the companies it holds. And remember, this yield comes with the added bonus of growth. SCHD's dividends have consistently increased year over year, which is a crucial advantage over static income sources like bonds. Compared to other dividend-focused ETFs, SCHD's yield is competitive, especially when you factor in its growth potential. And while short-term bonds might offer higher yields right now, those rates are likely to fall as interest rates eventually come down. SCHD, on the other hand, is built to keep growing, providing a reliable income stream that can help you stay ahead of inflation. So with SCHD, you're not just getting dividends. You're getting a growing economy that's designed to weather economic shifts. But dividends are only part of the story. Let's take a look at the defensive stock selection criteria that make SCHD a strong pick for uncertain times. Chapter 3: Defensive Stock Selection Criteria. When the market gets stormy, you want an investment that won't capsize at the first sign of trouble. That's where SCHD's defensive stock selection criteria come into play. Think of it as a ship built to withstand whatever the market throws at it. SCHD's secret sauce lies in its stringent criteria. First up, free cash flow to debt ratio. This ensures that the companies in SCHD aren't drowning in debt, but are actually generating more cash than they owe. Next is return on equity, a fancy way of saying these companies know how to turn your money into profit. And of course, there's the dividend yield. Because what's the point of investing if you're not getting paid? These criteria make SCHD a top pick for recession-resistant investing. It's like choosing a car with airbags, anti-lock brakes, and a great safety rating. You hope you never need those features, but if things go south, you'll be glad they're there. Now, let's talk about the sectors that SCHD is betting on: healthcare and consumer staples. These are industries that people rely on no matter what. After all, no one's giving up their medications or groceries, even in a downturn. SCHD's significant exposure to these sectors means it's built to perform well when the economy decides to take a nap. So while other investments might be searching for a lifeboat, SCHD is comfortably cruising along. And that's not just a bad joke, it's a fact. But being defensive is only part of the story. Chapter 4. Favorable Economic Environment for Dividend ETFs. Interest rates have been on a wild ride lately, and when they're high, it can feel like your money's stuck in the slow lane. But here's the good news. Those rates won't stay high forever, and that could be a big win for dividend ETFs like SCHD. Experts are expecting interest rates to start dropping as we head into 2025, and when that happens, dividend ETFs could see a boost. Think of it like this. When interest rates fall, the yields on those short-term bonds you've been eyeing will likely drop too. Suddenly, a solid dividend yield looks a lot more attractive. And that's where SCHD shines. Imagine this. You've got some cash in a short-term bond earning a decent yield. But as soon as interest rates start to cut, that yield drops like a rock. Meanwhile, SCHD's dividend keeps on trucking, offering you a reliable income even when bonds can't keep up. It's like switching from a rickety old bike to a smooth, steady electric scooter. Much easier to ride out the bumps. As we move into 2025, economic trends like slowing growth and increased market volatility make dividend-paying stocks more appealing. Investors will likely flock to safer, income-generating options, and SCHD is positioned perfectly to capitalize on that shift. Chapter 5. Multi-Factor Approach and Diversification. SCHD isn't just throwing darts at a board when picking stocks. It uses a sophisticated multi-factor approach, piecing together value, quality, low volatility, and dividend growth. These aren't just buzzwords. They're the pillars of a smart, balanced investment strategy. What sets SCHD apart from the sea of ETFs out there is its focus on high-quality, financially stable companies. These are the big players, the ones that can weather economic storms and still deliver returns. It's like having an all-star team where every player knows how to win, no matter what the scoreboard says. But with great power comes great responsibility. SCHD's portfolio is relatively concentrated, with its top 10 holdings making up a significant portion. While this focus can enhance returns, it also means that these few stocks have a big impact on performance. It's a calculated risk, and one that has paid off handsomely so far. So there you have it. SCHD's multi-factor approach is like a well-oiled machine, designed to deliver consistent, long-term growth. Now, let's wrap things up with some final thoughts on why SCHD might be the perfect addition to your portfolio. And there you have it. 5 solid reasons why SCHD is grabbing investor interest for 2025. Whether you're looking for stability, growth, or a reliable income stream, SCHD has something to offer. If you found this video helpful, don't forget to hit that subscribe button and ring the bell so you never miss out on the latest insights. And if you're curious about how much you really need to live off SCHD, check out my previous video entitled The Lowest Amount Needed to Live Off SCHD Charles Schwab. It's got all the goods you need for financial security. Thanks for watching, and I'll see you in the next one.